After a disappointing January, Tesla is finally up in a week, up 5%, which means that you would expect TSLY to be up as well. It would have been up, but they did release a dividend in the same week. So that's why TSLY is flat on the week. So with Tesla being up and TSLY should be up, it is no surprise that I am up this week, picking up the biggest yield of 2.13% and $546. So we'll be unwrapping all of that in this video. We've also got some new stats on here that I've added. And again, as always, we'll look at the next week's weekly pivot and see where we think Tesla's price is going to go. If you like the sound of that, all I ask for is that you smash that like button and don't forget to subscribe. So this is the second time since I've started 8 weeks ago where the premium I've collected is mainly down to the synthetic position or Tesla increasing in price. So I did the same in week 1 where I achieved $553, but last week in week 7, it was the highest I've ever made in terms of from a weekly basis of $546. So we remind ourselves of the covered call we sold in week 7. We initially had 267 in this box, but what happened, having the 182.50 synthetic and with Tesla closing at 193.56, Tesla was above my synthetic but also above my 187.50 covered call strike. So I kind of capped my upside gains, which is what this strategy does, and I decided to really take the whole synthetic off the table on the Thursday and then re-establish on the Friday. So if we break this down in smaller size chunks, so the covered call, as you can see here, was at 267. As Tesla rose and went above my 187.50 strike, you can see here that the price of that option increased. So it increased to $329. So when I closed this call out, it was a minus $63 loss. However, on the flip side with the synthetic, when I closed the synthetic at $609. And again, when you net out the 63, there you get your 546 difference of what I closed. And I decided to pay myself the full 546, which takes the total dividend to $2,997. Now, what you can see here is on the right-hand side, I've started to look at, because a lot of people have been asking me about my projected dividend yield and how much dividend I will make. So what this does, it looks at how many days I've been running this strategy. So the difference between these two is around 50 odd days. And then what it does, it takes that, divide that by the dividend to get the daily dividend amount, and then times it by 365 days. So my projected dividend yield on this run rate is just under $22,000, which is 73% yield on the initial starting balance of 30,000. So, making 73% yield, trading an underlying like Tesla, again, we can't really complain. But when we look at it overall, because Tesla has been dropping with the dividends, if I reinvest the dividends, I'll be down 16%. And if we look at it from, I don't know, it's just it's slightly over a month, but Tesla is down. It was down a lot more than this actually, so I can't really compare a like for like. You can probably do it on TradingView, but I'll do that another time. But with the dividends, it's minus 16%, but taking out the dividends, we are down 23% inside the portfolio. So even though I'm indexing against this again is kind of, if I was to reinvest the position, and if I ended up using that 16% to go buy shares in Tesla, which I think is the most optimal strategy when kind of deploying something like this. So again, if we have a look at it here, is we did 2.13% of capital, as I mentioned, highest I've done in terms of the week, which is good. So that's been paid out. So now let's have a look what I did in the current week. So as I said, I closed out of the synthetic and the call. I closed out of those on the Thursday. So on the Friday, what I did was I re-established the synthetic at the 192.50. Tesla's trading at 193.57. So that's the closest I could have got it. And again, we did that for a $61 debit. So, these things will come out when you end up closing out the synthetic, you'll get this kind of back. And then, so we had the 192.50 synthetic, and I sold the 197.50 covered call. So that looks at $244 in terms of premium. It's the lowest premium that I've got. It just down to the nature of the strikes and where the price is currently sitting. I didn't want to go at the current price in case Tesla did pop. And now as I look through it and I'm talking to you guys about it, I probably should have done that to optimize the premium. And I'll tell you why that is when we look at the chart in a second to decide what we want to do. So that's the kind of position overall and where we're kind of taking it. Again, it's the second time we had this. So again, if we look at the chart, I started here. This was the first up move where the synthetic made money, and this was the second up move where the synthetic made money. All the other weeks, the synthetic did not make any money for us. So, and that's why we are down, 6.8k on the synthetic, nearly $2,000 on the covered call, and that nets us out at the minus 4.8k. So that's kind of how we kind of get to this conclusion of how we're trading this strategy. And again, like I said, I've got the projections up here, which I'll keep and I'll update every week for you guys, so you guys can see what's going on. So again, if we have a look at the chart, we'll zoom in here. We can see here that on the week, it was a pretty good week on there, and it's starting to fill in this gap which was left by earnings. Again, kind of went through the pivot straight through, had a bit of support here, but again, it's kind of continuing that upward momentum. And on the hourly chart, you can see here we are starting to get into the overbought position. Now, for the first time in a long time, the weekly pivot that I've calculated will, when it draws it on Monday at market open, will actually be below the week before, and that's because we're inside this uptrend over here. So that's kind of what we're looking at here in terms of, as the tide turns. So this is why I was thinking I should have probably kept it around the same price, because what I'm expecting to happen is at some point in this week for Tesla to hit its weekly pivot. It may stay around there, may break it, may bounce off it and go higher, but I don't think it'll actually get to my covered call or my call strike at 197.50, which it's up here. It has to take out this high. So in hindsight, looking at it, I should have gone for the approach of actually taking more premium. I did this on my phone when I did the trades, so I didn't really have all the charts and stuff. I was looking very quickly. In hindsight, I probably should have done it at the synthetic call strike, but we are where we are with it, so I'm quite comfortable that for the second week we kind of made it. We have a look at the weekly pivot. So again, we hit that pivot, we hit the last 2 weeks pivots here, and it should hit this pivot. I think it'll drop down a little bit. It's just gone on a pretty straight run, and then hopefully it bounces off that pivot. And again, I've got the synthetic for, when is this for? February 16th. So I've got, is that right? Is it really only for a week? Okay, interesting. So I'll have to reestablish the synthetic anyway, because it does expire next Friday. So that's kind of the situation where we're at in terms of this position. So again, I really hope you found this video useful, and you guys are starting to understand more about how to use synthetic options. And obviously, if we were trading Coinbase or something that was going up, these videos would have been more kind of positive from that perspective. But it's gone down. It's good, useful content to see how you can handle these positions when things go wrong. So again, happy that we achieved our highest amount of $546. Could have picked up and probably should have picked up more premium, but again, just under 1% of total capital based on the current balance. And again, I think we're in a good place, and hopefully if we get anything 60, 65 plus in terms of dividends, I'll be a happy camper. So again, comment down below if you've got any questions, and I shall see you guys in the next video.